Hey everyone, this is Garrett Goggin with the Golden Portfolio, speaking to you today from the Metals Investment Forum in Vancouver, British Columbia. It's been a great show already. This is my first year here. I've been able to, share some of my, amazing undervalued opportunities with interested investors, and it's been a great show. And today we've got John Barker, CEO of Loncor Gold, joining me. With the Golden Portfolio, I'm a CFA MBA. And I look at companies on a market cap or enterprise value to NAV basis. I look for value opportunities, and I haven't found an opportunity like Loncor in a long amount of time. Loncor trades for only 50 mil market cap. It's a Adumbi project, is worth about $1.6 billion. That's a 97% discount, representing 30x upside. And John used to be a research analyst himself, and the value he saw in Adumbi and Loncor caused him to join the company and run the company. So thanks, John, for joining us.
Well, thanks for being here.
So speak to me about the undervaluation opportunity with Loncor.
Yeah, look, we're a story that has really grown aggressively over these last few years, from a relatively unknown 1.36 million ounces to a 3.66 million ounces. And of course, COVID was during the period too. So still not had any analysts down there, and you're covering us. Slowly but surely, we're starting to get traction. But that's one of the reasons that we don't have value, is because really we haven't been aggressively marketing up now our story. We have since November last year been marketing, and lo and behold, we've seen a 40% increase in our share price. So that's one key element, getting our story out there, and we're going to continue to market aggressively over the remainder of this year. But as far as valuations are concerned, there's also the fact we're at the bottom of the Lassonde curve, and we want to release value up that curve. And we've got to keep drilling and keep coming out with results, which we're doing, and that should release. When you look at something like Montage, it's had such a dramatic increase in market cap over 12 months. They've done it very successfully, and it's a real model for us, and something we'd hope to do as well. And then, of course, there's the DRC. And people look at the DRC, but there's a lot of really positive things going in the DRC. And when you look at what Rob Friedland and the Chinese have done down the south, Ivanhoe, you look what Kibali's doing, which is our nearest neighbor. There's some really positive things going on in the DRC, which people are just not aware of. So it's our job to make people aware of them. So we're looking to release value on various fronts.
Right, no doubt. The CEO of Barrick Gold, Mark Bristow, that runs Kibali, they've been operating in the DRC for over 15 years. Kibali is an amazing asset. It's a tier one asset, one of the best gold mines in the world. 700,000 ounces of gold at about $1,000 all-in sustaining cost. It generates a significant amount of barracks, and they've been operating in the DRC consistently without. I haven't heard of a problem at Kibali ever for over 15 years. And you're located like 50 kilometers just north of Kibali, right there?
Yeah, we're about 200 k's away from Kibali, and we've had zero production issues. It's just not something that's featuring for us.
Yeah. It just seems like, Bristow goes in and he takes care of all stakeholders equally. The community, the government, the employees, everyone profits equally. And it seems like the DRC government is happy with that. And as long as you treat everyone equally as equal stakeholders, it all goes well.
Yeah, look, I agree. And people must realize what actually has happened at Kibali. A town of 30,000 people has now got 350,000 people due to what's happened there. Banks, Toyota dealers, and for us, drilling companies, engineers, everything we need is sitting at Kibali. Todd Road through Uganda, everything comes into Uganda. There's significant trade too. So it's not only is it a phenomenal mine, as you say, the largest gold mine in Africa, but it's a real hub for the economy, which the government appreciates.
What percentage of the economy is mining in the DRC?
I'm not sure the figure on the mining.
But it's an important part, depending upon the sector.
Yeah, mining constitutes a major part of the DRC economy. It's been dominated by Chinese. There's figures out there that Chinese produce over 70% of the mine product in there. But more and more the US is looking towards the DRC.
Okay.
I think it's no coincidence that Joe Biden on his last trip went to Angola. What's happening in Angola is a railway from Angola into the Zambia and into the bottom of the DRC for the
Okay.
copper that's down there too.
Oh, wow.
So we're starting to see more and more attention being applied on the minerals, not just copper, cobalt, and then of course we've got gold as well.
All right, that should be good. Now back to Adumbi. It's got about 3.6 million ounces. The grade 2.5 grams a ton. Big open pit, right? Very, a very accretive and very economic. Your all-in sustaining costs, or about what were they, $900 or $1,000,
Yeah.
in your economic report. Just the NAV is absolutely enormous. This is a tier one gold mine. Basically with over, it's got about 300,000 ounces of gold production per year at, lowest quartile, all-in sustaining costs. Adumbi is a monster. And then you've been drilling a little bit below the pit, right? So that you expect that 3.6 million ounces to rise to about 5 million ounces, right, from the underground ore. And the underground ore is even more higher grade than the open pit ore. And that open pit grade of 2.5 grams a ton is ridiculous for an open pit, right?
That's right. I mean, we've done some peer group analysis, which is on our website. And we're sitting as one of the largest projects already at 4 million ounces in total. We've got a couple of other small projects.
Okay.
And as you say, we're aiming for 5 million ounces at the end of this year with the drilling that we're doing. So, and then grade, we're off the scale. As no one can get close to us with the grade that you're mentioning.
Yeah.
Within open, certainly within open pit. So yeah, it's a phenomenal assets. And so yeah, we tier one, high grade, and we're just going to drive forward with it. I think the key thing as well is this flexibility in this project. When you're getting low grades, you lose a bit of flexibility. Should there be issues? We've got major. We're not susceptible to changes in capex, in costs, and in metallurgy. If they're minor. When you're getting to major figures, then it has implications. But there's such a wide margin in our project that we've got great flexibility. We've got flexibility in how we move forward. Should we go for a large pit, as we've already modeled in our PEA, or should we look at a smaller pit? And when we know more information from underground, maybe we put decline and then mine underground, which is what's happening at Kibali now. So this is all the options that we have because of the quality of this project that we've got, not just from an economic point of view, but from a production point of view, with great flexibility.
Yeah, and this underground drilling and the underground ounces are going to add, high grade ounces below the pit. So your economic report was based off a large open pit. You could move to a smaller open pit with half the capex and then operate underground, and that goes like for 20 years to infinity, because you haven't even defined the extent of the underground resource. It's amazing the optionality that you get with the project due to the grades.
That's right. That's right. And that's one of the things that's sitting in the back of our minds when we get the drill results. We have more indication. I mean, there are some indications the ore body's getting wider at depth, for example, which would be great.
Yeah.
It's not that we don't have enough gold as it is, but there is some positive. But we have to drill it to find out. Once we have those drill results, then maybe we look at redoing the PEA, as you say. Smaller pit, that reduces our overburden costs in the first few years. Great for IRR, great for payback, and then do a decline and underground. So these are all things that we'll be looking at internally over the next year or so.
Yeah, it sounds like it's going to be one of the best gold mines in the world. And just, I know we've spoken about this already, but you're trading at a 97% discount to fair value. Why haven't more people found the opportunity yet?
Yeah, the fact is we haven't been marketing aggressively, and like many juniors, we just didn't have the cash. And then we sold an asset, $10 million, around a year ago, which allowed us some flexibility, and we've been aggressively marketing on the back of that. So that's one of the major reasons we haven't been able to. Even at this conference, we're finding numerous people that just haven't heard the name of Loncor. And it's an easy story. Big, getting bigger, high grade, and we believe relatively cheap.
Yeah, and people are just amazed at the opportunity. It's like, why haven't I heard of this? How can this be selling at such a big discount? Yeah. And Resolute Mining owns about, 15% of your shares?
They're sitting at around 20% of our shares,
Okay,
yeah.
Okay. Adumbi looks like a perfect fit for, one of the majors. The majors, their production's declining. They're looking for growth opportunities to, boost their free cash flow per share. You get Adumbi or Loncor trading for 50 mil market cap, and then they would be able to spend, what was the capex on that economic report?
Well, to construct your plant and all of those elements, it's just under 400 million.
Yeah, okay. So all in, you're 450 mil, 500 mil, and then you're getting back, $1.6 billion of value, just the free cash flow from the project, it would probably be close to, you get a payback of like less than 1 year. It just, I haven't come across an opportunity like this. One of the best gold mines in the world selling at a tremendous discount.
Yeah,
Yeah.
I'd agree.
Yeah. Okay. And then you said you're going to focus on marketing. You're focusing on drilling for the next couple of years. You sold a project. You've got money in the bank right now. How much cash is left?
We have around $3 million US sitting in the bank.
Yeah,
So that's
okay.
going to keep us drilling through probably towards Q2.
Okay. Okay.
Yeah.
But the larger companies, they must be. You must have a lot of meetings, a lot of interest from them, right? In China.
Look, we're always in discussions with interested parties in the
Yeah.
nature of the ore body. And again, if you look on our website, we have a chart that illustrates that around us, this projects of a similar size have over the last few years been taken out. So we're in a very interesting space for corporate activity as well. It's just we have to try and find the best way to release the best value for shareholders.
Okay.
And we're just working out that path day by day.
Okay. Yeah, I like that chart in your presentation because it shows the comps of about 6 mines, and it was like acquired. You're in the middle. Acquired. It's a no-brainer as far as I can see. So is there anything else you'd like to share regarding Loncor?
Well, I'd just like to emphasize again that the DRC is really showing positive signs. Over the last decade, it's moved from nowhere in the copper production to being the world's second largest copper production. That's physically happening. It's not going to happen. It is happening. You look at Kibali, it's just churning out cash, as you said. It's not going to happen. It is happening.
Right.
So mining in different commodities in different parts of the country is happening in a very, very positive way. So I just believe that the discount on the country, you need to look at what's physically happening. Every country has legacy issues. You can look back and pull out issues. But currently, as it's looking now and looking forward from here, it's looking very positive for us to keep developing. We already have a mining permit in place. Where do you see that with an early stage explorer like us? We already have the government with a 10% stake in place. Yeah. Again, another hurdle that's taken, de-risking our project. And I'd just like people to see that the nature of what we've got in a jurisdiction that has mining is close to us, and a country where mining is currently developing quite aggressively.
It's just, I think the average, American or even European investor, you look at Africa, you hear problems in Mali, and people are like, oh, Mali, CDI, Burkina Faso, and the DR, they look at them all the same, but they're not. The DR is much different from Mali, right?
That's right. I mean, just looking at fundamentals, the DRC is a predominantly Roman Catholic country, which already differentiates it from a lot of countries that are having issues. That's not to say that there are some flare-ups from time to time, but it's a huge country size of Western Europe. It's had a democratic situation since 2006, and Tshisekedi, the current president, was re-elected in December for another 5 years. We know how the guy operates. We know most of the people in the significant positions, and we're happy to moving ahead with him over the next 4 to 5 years. And of course, Mali's military junta. There's other influences in the country, and that's true of a number of other countries. His relationship with Mali and the way that they're developing it seems to be spreading through a few other countries, but it's not the case in the DRC, and so it's just not a similar issue.
It's run the right way. It's just the government must be very happy. What is it, 15% tax in the DRC?
Now we're looking at about 30% tax. You're looking at a 3.5% royalty and a 10% government stake.
So
but this is a country that's also got the highest GDP increase last year of sub-Saharan Africa.
Oh, really?
Again, a reflection of positive things happening in the country.
Yeah. From all the money that mining gives, the government versus like Mali going and taking a mine. They might up front get $100 billion, but no one's going to mine in Mali for the next 10. They shut it down. They lost all their taxes, whereas at DRC, they get all that tax revenue every year if you get set up right. So all the stakeholders share equally. It's a great opportunity. So thank you very much, John, for joining us. I always love to talk to you and learn more about the story and to share it with your the audience.
Yeah, and I just to summarize, to confirm that I think we're there. We've gone under the radar very much through COVID with our growth, and now we seem to be lagging our peer group and fundamental analysis. And we're excited about the next 12 months, about what we're doing, and hopefully how we can tell the story to a wider audience.
Nice. One more question. What do the institutional guys think of Loncor?
Well, look, we've got some institutional guys we put in the last 2 to 3 years, and they're there for the long term in the story. They realize that this is going to turn into something really interesting through one avenue or another, and they're holding. We still predominantly retail, but more and more institutional are getting involved.
Okay. Awesome. All right. Great. Thank you, John.